Okay, let's get straight to it. We're in the Situation Room. It's early 2026. A single event flashes across the screen on the Hong Kong Stock Exchange, and suddenly, Washington, Wall Street, everyone is on high alert. And believe me, this wasn't just another market tremor. This was a declaration.
And this is the number that set off all the alarms, 72.9%. That was the first-day IPO surge for a Shanghai-based AI chip company called Biren Technology. Now, they didn't just raise over $700 million. No, the offering was oversubscribed 26 times over. You see, this wasn't just a successful IPO. It was a shot across the bow, a clear signal.
But of course, my partner Sam, he's always the skeptic. He immediately jumps in, "Hold on, Alex, a 73% pop? We've seen this movie before with dot-coms, with crypto." He asks, "How are we so sure this isn't just a bunch of investors chasing hype? Is this a real strategic move, or is it just another bubble waiting to burst?"
And you know what? That's the critical question. To really get the answer, you have to look past the flashing stock ticker and get right down to the hardware. Because this entire drama, it revolves around one single piece of silicon that represents China's absolute ambition to dominate the world of AI. So let's start there, on the silicon front.
Just look at the sheer audacity of what Biren is claiming here. On the left, you've got NVIDIA's A100 chip. That's the global workhorse, the gold standard for AI. And on the right, Biren's BR100. And they're not just saying it's a little bit better. They are claiming a 13 times performance advantage in some tasks, and about 2.5 times faster overall. If those numbers are even close to real, this isn't about playing catch-up. This is a calculated attempt to leapfrog the entire industry.
But, and this is a huge but, here's the massive catch. For all its supposed power, the BR100 isn't really all Chinese. Sure, it's designed in Shanghai, but it is born in Taiwan. It's manufactured by TSMC using their incredibly advanced 7-nanometer process. And that, right there, is the Achilles heel. The entire supply chain is totally vulnerable to US export controls, and of course, the geopolitical powder keg that is Taiwan.
And this chart just lays out the staggering gap China's trying to close. I mean, look at the market caps. A global giant like ASML, which makes the machines that make the chips, is worth almost $300 billion. China's domestic champions, AMAC and Nerua, they're just a tiny fraction of that. Beijing is pouring money into this sector, but becoming truly self-sufficient, well, that is a long, long way off.
And you know, it's not just a race against the United States. It is a brutal internal fight for survival. Biren is just one of what they call the 4 little dragons of China's GPU sector. They're all backed by huge state investments, but they are locked in a zero-sum deathmatch for dominance. Like this analyst says, only a few of them are probably going to make it.
So I lay all that out, and Sam stops me. He says, "Okay, Alex, I get it. The chip is a beast, but it has a major weak spot. But you're only telling half the story." He says, "The real strategic play here isn't the technology, it's the money. It's how and where they raise that cash. This is what he calls the capital front, or the Hong Kong market guard."
He tells me, let's follow the money. The IPO is priced just under 20 Hong Kong dollars. The professional analysts, they thought its fair value was a little higher, around 22. But look where it closed on day one, almost 34. That isn't rational market behavior. That, my friends, is a massive, coordinated bet on a national champion, and it's driven by something way bigger than just profit.
And that something bigger has a name: sovereign AI. This isn't some fringe idea. This is official state doctrine in China. It's a national strategy to build a self-reliant AI fortress. We're talking hardware, software, data centers, the whole shebang, completely independent of any foreign and especially American technology and control. This IPO, it's just one more brick in the wall of that fortress.
So you might be asking, why Hong Kong? Why not list on a bigger exchange like New York or London? Well, that's the whole point. Listing in Hong Kong creates a financial pipeline that is deliberately insulated from Wall Street and, most importantly, from US sanctions. It's a sanctions-proof way to funnel cash to these critical companies. Hong Kong has become the new gatekeeper for China's technological ambitions.
Exactly. And when you put the two fronts together, this aggressive push for a world-beating chip and the creation of a sanctions-proof capital pipeline, you finally see the full strategy, and it is on a direct collision course with the US response.
Now, let's be crystal clear about the stakes here. Beijing has explicitly and repeatedly stated that Taiwan is the first red line. The fact that Biden's superchip depends on Taiwan for manufacturing ties this whole tech arms race directly to that military red line. The chip, the money, and the island, they are now completely intertwined.
And how is Washington responding to that red line? With this number, $11 billion. That's the value of the latest U.S. arms package to Taiwan, the largest one ever. We're talking rockets, missiles, drones, all designed to make a potential invasion as painful and costly as possible. This is the U.S. showing its commitment is backed by cold, hard steel.
So the U.S. strategy is really a multi-pronged economic chokehold. Step 1, cut off the tech with export controls. Step 2, cut off the American money with investment bans. And step 3, block any attempt by Chinese firms to just buy the U.S. tech they need. It is a systematic campaign to starve these ambitions of both the technology and the capital they need to grow. And none of this is happening in a vacuum. There is a clock on the wall. In Washington, they call it the Davidson window. The intelligence assessment is that President Xi has ordered his military to have the capability to take Taiwan by the year 2027. And that single date has become the central planning assumption for everyone at the Pentagon. The clock is absolutely ticking.
Which brings us to where we are now. This isn't just business competition anymore. This is a new kind of arms race, and it's being fought in chip fabrication plants and on stock exchanges. It's a battle that is fundamentally fracturing the future of global technology.
So here it is, the two opposing strategies, plain and simple. On one side, China is building its walled garden, a closed, state-controlled, sovereign AI ecosystem. And on the other side, the US is tightening the chokeholds on technology and capital, betting it can slow China down long enough to maintain its lead. And that leaves us with the one final question. What we're watching is a collision between two fundamentally different ways of doing things. Top-down, state-backed ambition versus messy, chaotic, open market innovation. The winner of this contest won't just decide who makes the fastest chips. They will define the technological landscape and the geopolitical order for the rest of our lives.
Thanks for watching. Don't forget to like, subscribe, and share. It really helps the channel grow. See you in the next video.